All right, welcome to a free demonstration of how to read a credit report brought to you by killbadcredit.com. This is a complimentary sample credit report by TransUnion. TransUnion Consumer Credit Report Sample. This is the property of TransUnion, and all I'm doing is giving you a quick demonstration of how to read your credit report, because this is one of the hardest things to do if you've never seen a credit report before. And with this free demonstration, complimentary of TransUnion, who will issue you a free credit report once a year, you need to know how to read your credit report. So follow my tracer here, because that's all I have to use. But I want you guys to understand this, because once you get the book and things like that, you're going to need to know how to read the report in order to put the correct information on your letters. So let's start from the top section, which is the name of the company, and it tells you TransUnion Consumer Credit Report. Subscriber name is in the upper right hand side, and the subscriber code marking is very important. So this code looks like this would be the code that you will identify your credit report as under subscriber code market right here. I don't know if I can highlight it right here, but yes, this section right here. And it gives you the date that the report was issued under results issued right here. Hopefully you can see this. Now, it gives you the last four digits of your social security number, and let me correct that information. This right here, correct what I just said from up top. This is the identification to identify your report. It's called the reference ID. All right, certain reports may call it confirmation number. So it's all different numbers, but it's whatever number you need to reference the credit report by. And then underneath that, it has your social security number, your name, and address. Now, let's go to this top section here. Now, at the top, it has your name, known as all your different alias names and things like that. And it has your social security number and date of birth. As I said, this is just a sample. Phone number and in file since 1978. So what that means is they've been reporting information on Elizabeth Duncan, which is the name, or Elizabeth Cook, since 1978, since April 1978, in the file since. All right, now, underneath that, you have the current address, the previous addresses over the past 7 years or so, or it could be the lifetime of your credit report. Now, let me say something specific about this. The current address is very important to where you live. A lot of times you can have incorrect information on your credit report as it relates to your addresses. Your addresses can confuse your name. If you have a common name, especially like John Smith, you can be confused with a lot of different John Smiths all across the United States of America. So, point that you should know. Take notes, and I hope you got a pencil and paper ready. If you see any addresses on your credit report that do not agree with where you live, remove them, because as a result of incorrect and inaccurate information on your credit report, that can be one of the reasons that you could be getting debts on your credit report that do not belong to you, because your name is similar, a very common name, for example. You may be pulling in other people's information on your credit report, so it's very important and imperative to dispute this information. Next, the section below that is employment. All right, so what they have here is basically the places that you worked. So this is very important as well. If you did not work at any of these jobs that's on your credit report, get them removed. Get them removed, because obviously it's linking to someone else that has a similar name to you. So under this section here, you have alerts and special messages. So ID mismatch alert. Previous input address does not match file address. So what that means is, like I said before, if the address doesn't apply to you, get it deleted, because you will get alerts, to alert the credit bureaus that an address is similar to yours. And again, you could be getting debts pulled into your credit report that do not belong to you. Now, underneath that, it says high risk fraud alert. Input Social Security number, SSN, not issued by Social Security Administration. So on this credit report, you pretty much have a fraud alert on there because you're issuing a Social Security number that was not issued by the Social Security Administration. A lot of times these numbers can result from the alleged CPN numbers, all the false numbers out here that were not issued by the Social Security Administration number. So by the Social Security Administration, I'm sorry. And then now the systems are in place to alert the credit bureaus of any fraudulent numbers. So be very careful when it comes to getting those types of numbers. Now, Social Security year of issuance. Now, that's the year the Social Security number that you input into the credit report or on your credit report was issued to you. Now, all reports don't have this information. You very seldom see the year issuance of Social Security numbers, but it's important that you recognize what you're looking at because the Social Security and the credit reports, like I say, they do not look the same, but all the information on the credit report is pretty much read the same way. Now, Identity Manager Verification, which I'm right here under this box right here, and I'm just going to go down this report. Now, fraud model score, 200 plus 200, ID score 500. Score factor codes 345. Phone number associated with a mailbox facility. Now, 678 identity elements linked to suspected fraud activity. 901 identity low risk for identity fraud. All right, so these are specific codes that TransUnion uses to make different references to situations that may arise on the credit report. Now, I haven't gotten into the meat and potatoes of things yet, but this is important to know so that when you're looking at a credit report, if you see this information, that you understand what you're looking at. So they have a ID score and a model score that they're using. So 345, phone number associated with a mailbox facility. So basically, this customer right here, they're not using their regular address, and their phone number is linked to possible UPS store or a post office box, which is not an address that they like to see for U.S. persons or U.S. citizens. And 678 is identity elements linked to suspected fraudulent activity. So they have an alert on this credit report of suspected fraudulent activity. So make a note of that. In identity, low risk for identity fraud. Now, anything on this credit report can be disputed, and I encourage you to dispute anything that's not yours, that doesn't belong to you. That's what you dispute. All right, now let's talk about the scoring. So the scoring right here is the Vantage scoring type, Vantage score, TransUnion bankruptcy model. You have two different scores. You have a 590 and a 533 score. Typically, the credit bureau only gives you one score. Each credit bureau gives you one score. Let's be more specific so that you guys understand that you're going to get a score from each credit bureau. TransUnion, which is the report we're looking at now, Experian, which is reporting agency service, and Equifax, and they all issue you scores. So, for example, if TransUnion issues you this 590 score, Experian issues you a 600 score, and Equifax issues you a 720 score, well, the majority of the time when you're dealing with a lender, well, let's use buying a house, for example. They're going to look at the middle score. So if you have a 590, a 680, and a 720, well, they're going to qualify you off the 680, which is the middle score. And that 680 could be with, you could have a 590 with TransUnion, a 680 with Experian, and a 720 with Equifax. They're going to use the 680 score in order to qualify you for a home. That's good information to know, because that's the reason why you need to understand that you have to have all three credit reports, and you should know your scores. All right, so let's take a look at this section right here. This is very important. Credit information section. All right, now you have the total history on this section, which is very important. It tells you how many public records, 2 public records. How many accounts are in collection? 1. How many trades? 4. So what we're talking about trades, or we're talking about actual credit items on the credit report that we call trade lines. And that's what we're specifically speaking of trade lines. And now inquiries, you have 4 inquiries. Now you can have inquiries or soft inquiries, and you can have hard inquiries. Now, hard inquiries can affect your score. Within the letters in the book, you can also copy and paste or type those inquiries out and request and demand that those inquiries be removed off your credit report. Now, the second line is negative trade accounts. So you have negative trade lines. You have one. Trade accounts with any historical negatives. That means any trade lines, any items on your credit report that has lates on the credit report. All right, in an occurrence of historical negatives. So over the lifetime of the history of the credit report, how many negatives have you had? That's what that means. Now, this is very important. You have three different types of accounts. You have revolving accounts, revolving credit. You have installment loans, and you have mortgages. Now, revolving credit tends to be, kind of like your credit card debt. All right. So you have like a credit card, for example. You have two credit cards here, revolving with a high credit of $10,000. The max credit limit was $18,000. So they got $18,000 credit limit, and their high credit is $10,100, as you can see right here. So they look at these numbers of how you manage your credit, and they have a balance of $5,330, not past due in this section over here. They make a payment of $225, and they have 71% of the credit available. So that's pretty good. If you have a balance of $5,000, well, $5,350, you have a high credit limit of $18,200. So you might say, well, why is it that the credit limit is $18,200 and the high credit is $10,100? What's the difference? Well, the high credit was when you originally established the credit card, and then the credit limit is what's available to you now, and the balance is what you owe on it. And if you're past due, you're past due in this section. But on this $5,350 balance, they make a payment of $225 a month. Therefore, they have 71% of the credit available. So what that means is, out of that $18,000, there's only been a usage of $5,350. So you have a good amount of credit that you could use. Of course, it's not recommended to use that credit. All right, so down to the second one. You have an installment loan, one installment loan, $16,900. Installment loan can be an auto payment or something like that, a lease or something like that. But let's look at it. There's a high credit of $16,900, and there is no credit limit. And that's the difference between a revolving account and an installment loan. There is no credit limit on the account. There's just a balance to pay. So basically, imagine it like this. A credit card, you can borrow against that credit card. You can make payments on that credit card, and you can get actual credit extended to you. Once you get an auto loan, well, it's a loan amount that needs to be paid down. So it's an installment loan. So you're paying that loan in installments until it's paid off to zero. Now, on this account, there's one account with a high credit limit of $16,900. A high credit, and there is no credit limit, but the balance owed is $12,900. So they owe not $12,900 on a amount of credit that was extended to them to purchase a car of $16,900. But here in this section, you see that they're past due $1,128, and they only make a monthly payment of $282. Are you following me? So basically, with all credit reports, for the most part, you got the high credit limit, the credit limit, and the balance, and the payment, and the available percentage of the balance. All right, now, in this case, there's a mortgage. Down at the third section, there is a mortgage, one mortgage, high credit limit of $232,500. So when they first purchased that house, they took out a loan for $232,500. All right, now there is no credit limit on it because you could borrow against your house, but in this case, that would be considered a refinance or a streamlined type of mortgage. But I don't want to get off on a tangent on that. That's something totally different. All you need to know is that your original balance is $232,500, And this is how much you owe on it: $173,200. You're not past due on any payments, and your monthly payment is $1,470. All right, so at the bottom of all of your debt, you have the totals. They add it up for you. They say, okay, you got 1, 2, 3. 3 counts of trade lines. Well, actually 4 counts of trade lines on your credit report, which matches the trades here. 4. For a high credit limit, you have a total outstanding credit limit of $259,500, which is adding up all of the credit cards and installment loans and mortgages into one number. And your credit limit is $18,200, which is the credit limit from the revolving credit card debt that you can actually borrow and make payments against in the form of credit. Your total balances is $191,400. Your past due total amount is $1,128 with the past due on the installment loan, and then your total monthly payments is $1,977. All right, so let's scroll on down to page 4. Now, let's talk about the public records section. If you dispute any of the public records section, you're going to actually take this docket number and put this docket number along with the type Chapter 7 bankruptcy on the actual letters to make the dispute. You're going to say public records, I dispute such and such, if this is in your case, and you dispute this, and you put the docket number on there that you dispute and the total amount of the liabilities that you're disputing on the letter. And right here is a Chapter 7 bankruptcy. And then right here, there's a public records. And there's a paid civil judgment that was on the credit report, a paid judgment. So this shows the original balance, and it shows the current balance, and it shows that the judgment was paid. Now let's talk about judgments. Now, sometimes a judgment, even if it's paid, can harm your credit at times, depending on like what you're doing, like what are you applying for. If it could be a credit card, well, they like to see if you had any judgments or tax liens in the past 24 months. And if it's paid, sometimes they still can bump you down a lower credit risk, a higher credit risk, because you had a judgment. So if it were me, this, since it's paid, of course, is going to be removed, because you don't have to keep the information on the credit report because it's paid. And anything that's going to harm you, you don't need on your credit report. Now, collections. In this section right here, they only have one collection. So you have a original creditor was ABC Bank, a collection. The balance is $1,000. Now this is a verified collection of 4 of 2007, and it was opened, meaning that they actually opened this account with ABC Bank on 5 of 2002. All right. So this is a collection. This is something that you may have a collection agency calling you about in order to pay this debt. Of course, you don't have a contract with the collection agency, right? You had a contract with ABC Bank. Find out more information at killbadcredit.com. Now let's talk about these trades. These are trade lines. These are the credit items that are on the credit report that are open and active. When I say open and active, that means that we are actually in the process of making payments, and you have activity on these credit card debts or installment loans or mortgages right now. All right, so these are trade lines. Abbreviated here is trades. Every credit report, if you have items on your credit report, they are called trade lines. Now, let's pay attention to what's important when you're looking at learning about your credit report. Okay, trade lines. You have the name of the company, the account type, automobile, remarks about the account in dispute, payments, 30, 60, 90. Okay, now, every credit report is different. I'm going to get to the payments and how it looks. But you have 30 days, 30-day payments, late, 60-day payments, late, 90-day payments, late. So, when looking at this payment right here, over the past 20 months, which actually they look at 24 months on the credit report, so keep that in mind. They're one times 30 days late in the past 20 months. They're one time 60 days late in the past 20 months. and they're 5 times 90 days late in the past 20 months. Now, when they first opened up this account, they had a high credit. Okay, these are key terms. High credit is the opening amount of the loan when you first open up the credit card debt or the debt. So they started with $16,900. The terms was a 60-month term, 60M, $282 payment. All right. Delinquency 1 of 2007 was the last delinquency, and the amount is $1,410 that they are delinquent according to the maximum delinquency. Now the balance that they owe is $12,900, and they're past due $1,128. Now you may say, well, you just said the delinquency is $1,410. Well, what that means is that's the maximum that they've been delinquent. All right, so let's go over to the section over here. This account was established August 2005. This account was verified on May 2007. Verified. All right, so months within the past 12 months right here. This is what you have within the past 12 months. So if you're looking at these numbers on your credit report, you're wondering like, gosh, like what does this mean? What are these 4s? What are these 5s? What are these 4s? What are these 3s? What are these 2s? Well, let's look at it like this. When you have 1s on your credit report, all 1s, that means you're 0 times 30. 0 times 30 days late, meaning that you haven't been late on the credit report. So these are 1s, 0 times 30 during this time period. But here we have a 2. So they were 0 times 30, then all of a sudden there's a 2 pop up. So now with the 2, they're 1 times 30 days late. Okay? Now a 3 pops up. Now they're 1 times 60. Okay? Now a 4 pops up. They're 1 times 90 days late. Now a 5 pops up. They're over 120 days late on the payment. And then right here is a 4. So they must have made a payment. Now they're 90 days late still because they didn't pay it off in full. So they're 90 days late. They may have paid a payment and to bring it down to catch the balance up a little bit, but they're still 90 times late. Now, 90 days late. Now, here's something that's very interesting. Now, like I said, you have a 2, which is 1 times 30. You have a 3, which is 1 times 60. You have a 4, which is 1 times 90. You have a 5, which is 120 days late. But notice here, you got 2 5s in a row. So that means that's a rolling 120 days late. Rolling. So he was 120 days late 2 months in a row. And you have 2 4s. He was 1 times 90. He was 90 days late 2 months in a row. Okay? So that's a gist of how you read those numbers on the credit report. Just know that if you don't have 1s, and if you got 30s, 60s, you're late. If you got 2s and 3s, you're 60 days late with 2s. 3s, you're 30 days late. 3s, you're 60 days late. 4s, you're 90 days late. 5s, you're 120 days late. If you see 4 and 4, that means you're rolling 90 days late 2 months straight. Or if you see 5 and 5, you're rolling 120 days late 2 months straight. That's how you read the credit report. And those what the numbers mean. And let's look at this trade line right here. So basically on this automobile, he was late. He has a high credit limit of $16,900. So when he first bought the car, that was the loan amount, $16,900. The terms on this was for 60 months at $282 a month. Now, he's been in the past 20 months over here. He's been in the past 20 months, late payments in the past 20 months. He's been 1 times 30, 1 times 60, and 5 times 90 days late. So in the past 20 months, that's what he's been. As you can see, okay, right here, it's only 20 months reporting on the credit report, most likely. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. So you got 20 months of payments right here. In the past 20 months, he started off paying good. real good. Then all of a sudden he could have lost his job. Then he became 1 times 30. Then he became 1 times 60. Then he became 1 times 90. Then he went 2 months straight without making a payment, 120 days late for 2 months. Then he dropped down to another 90 days late. This is a bad credit debt. This will get you denied for a loan. So what if he's back on track right now and all his payments are good? Now he's like, okay, well, the credit bureau looks at it like this. Well, in the past 12 months, in the past 24 months, you've been like 5 times 90 days late, which is the max. They give you the worst reporting in the past 24 months. Or in the past 12 months, you've been, 5 times 90 days late. Because in the past 12 months, you got, January, February, March, April, May, June, July, August, September, October, November, December. So the past 12 months, you look at the 4s, you look at the 5s, shucks, I'm not going to give you a loan at the bank. There's no way. You're not going to get approved for a credit card. Maybe, maybe not. But if you are approved for the credit card, you best believe you're paying the highest rates on the market. That's why it's imperative to understand how to read that credit report. And that's why I'm hoping this information is actually helping you out. Now, the second trade line, and that's the example of a bad credit card debt that we're just looking at on a car. So now the thing about it, pay attention, that they're disputing this account. Is in dispute. So the question is, what are they disputing? Okay, and it could be a number of reasons for a dispute. The debt could not be theirs. Or maybe someone stole their identity and got the car in their name. Maybe there's no verifiable contract. Maybe someone else got the debt in their name because the account is in dispute for some reason. Okay? Now, if you look at it from an analytical perspective, the account's in dispute. It could be from a marriage because all the other debts are paid on time. If you pay attention, look at ABC Retailer. The account number's right here. They started off with $16,700. All right. They had a high credit limit of $9,600. They had a minimum term of 200 months. This is a credit card. So within the past 29 months, which you're not going to see any a 30 or a 60 or a 90-day late, because they only look at the past 24 months on a credit report, not the past 29 months when they're looking at these, when they're trying to put you in the credit bucket. Now, they're looking at the past 24 months. So this is a credit card, as you can see, with a high credit limit of $16,000. It started off with a $16,700 balance. Now the high credit limit is only $9,600. It's possibly because of the lates that they had within the past 29 months, a 30 and a 60-day late. All right, the amount that they paid was $230. The balance that they owe on this account is $5,200 on a high credit limit of $9,600. All right, paying a $230 payment. The minimum payment is $200. Now, as you can see, this account was verified on 5/7 of 2007, and they're all ones. So in the past 24 months, that's what you have right here, 24 months, they are 0 times 30. But in the past 29 months, they are 1 times 60 and 1 times 30. But we're only looking at the past 24 months. All right, now this is a mortgage. Let's take a look at that. You have the account number. You have the remarks. It's a conventional mortgage. In the past 48 months, they're 0 times 30, 0 times 60, 0 times 90. When they bought this house for $232,000. Their loan amount was for $232,500. The terms of this is 360 months. If you take 360 divided by 30, it's a 30-year mortgage, and they pay $1,470, okay, a month. Now, the balance that they owe on this house is $173,200. This account was opened November of 2001. It was open. It'll tell you on the credit report, open. Or if it was closed, or if it was paid. And this account was verified. Notice every account was verified on the same day. All right. And as you can see, it's all ones. So it's 0 times 30 on the mortgage in the past 24 to 48 months, which is a good credit situation to be in. 0 times 30 is a great. Now you have ABC Department credit card, 0 times 30. The account number here. The credit limit is $1,500. The high credit, meaning the balance on the account, is $500. High credit limit is $500. The minimum payment is $25, and they actually owe $150 on the credit card. This account was opened 12 of 2006, and it was verified 5 of 2007. So this account is a little over 12 months old. Maybe is it 12 months? No, it's not 12 months. It's about 5 or 6 months. So you have 1, 2, 3, 4, 5 months reporting on the credit report, right there, all ones. So this account hasn't been established for 12 months as of yet because it was opened in 12/2006, and it was just verified 5 of 2007. So you have 1, 2, 3, 4, 5 months of reporting. All right. So inquiries. Inquiries are very important, man, because inquiries can lower your score, especially hard inquiries. They can definitely lower your score. So the key is to get those inquiries removed. Now, if I was disputing these inquiries, I'm saying, okay, ABC department store. Oh, maybe somebody applied for a credit card in my name. All right, a test bank. Maybe somebody tried to get a car in my name. Main Street Auto. Maybe someone tried to get an auto detailer card in my name. You know, or maybe I did it. But at the end of the day, these are inquiries. Maybe you're trying to inquire to receive credit. Maybe you were turned down because of the lates on the previous credit for the automobile. Okay? So you can dispute these credit inquiries simply by copying and pasting these information and actually putting them in the letters and demanding that they're being removed for the reasons they're not yours. You did not authorize these inquiries. You did not authorize these companies to report on your credit. It's very simple. All right. Now, inquiry analysis. All right. Subscriber name, Main Street Auto. It gives you the identifying information of the companies that made the inquiries. And of course, if you want to put a consumer statement in your report, I'm not really big on consumer statements because really, quite frankly, nobody really reads them. And if they do, it has no effect on if you're going to get approved for a loan or not. Matter of fact, you probably get denied. So I would leave out consumer statements because gone are the days when you actually had a relationship with the bank where you can walk in and people can actually make a determination of your personal credit worthiness based upon you as a person or as an individual, as a man, whatever you stand on. So that's just a statement for the records for the consumer reporting agency, so they're noted, but they're not going to approve you based or deny you based upon the statement on the credit report. Now, at the end of every credit report, there is codes. And so if you ever had any question, they should have a cheat sheet of what the codes mean on the credit report. Like, so you type the different types of account we looked at. We looked at R, normally stands for revolving. I stands for installment. M stands for mortgage. O is an open account. C is a check credit, line of credit account on this report. All right, so now, I dropped my phone here. I'll pick it up real quick. Excuse me. Now, it's very important to look at these indicators. You know, if the account is closed, it's very important. Or if this account is repossessed, you got an F. If the account is frozen, you got an M for manually frozen. Paid out, reported, verified. All right. Now, current manager of payment, MOP. Code 1. Like I say, ones are good. Paid as agreed. 2. 30 to 59 days past due. So if you ever reading your credit report, and you see these numbers, if you don't know what they mean, you can actually go to the index that should have a description of what the letters, the numbers, and everything means. So, as you can see, we were looking at the credit reports when we saw some twos. We saw ones, paid as agreed. We saw some twos, 30 days late to 59 days late. Threes, 60 to 89 days late. Fours, 90 to 119 days late, past due. And 5, 120 days or more past due. 7, paying or pay under wage earner plan or similar agreement. You made some type of agreement with the credit agencies to make some type of payment. 8 is a repossession. 8A is a voluntary repossession. AP, paying or paid account with MOP. 9 is a charge-off to bad debt. 9B is a collection account. 9P, paying or paid account with MOP. 9 or 9B. UR is unrated. Now, you can actually go through all these descriptions, but pretty much, you know, you have other information, which is employment section, that they actually have that information on your credit report as well. So they normally have your date of birth, social, on your information about your employment, and information about you. But that pretty much sums it up, and also gives you a special alert section when he talks about different fraud alerts and things like that. But the meat and potatoes of the credit report is understanding what you're looking at. Now, every report, again, will look a little different, but the information that you need to know is very important. Let me just give you a recap. The most important thing in order to reference your credit report is the reference ID number. All right? The second important thing is to understand that all of your address information, name, and everything is correct on your credit report. The next thing is if you so happen to pay for a score, because initially your credit reports are not going to come with a score unless you applied for a mortgage, a car, something that they actually pull your credit, and you will see the scores. Otherwise, you're just going to get the information on your credit report minus the scores. It's very important to understand that. So once you get your free credit reports, don't look for the scores unless you're going to pay for those, because they don't give you those for free. That's something you have to pay for separately, unfortunately. But at the end of the day, you need to understand how to read public records, trade lines, things that we went on, inquiries, and the types of installment and the types of credit card debt, whether it's revolving, installment, mortgage, auto leases. All right. And recall that every credit trade line or credit item on your credit report starts off with a high balance, meaning the high balance is what did you open up the account with, the maximum amount. What did you open up? All right. So, and then the credit limit is the amount of credit that's available to you. So this revolving account, just to use that as an example, it's two revolving accounts. This high credit limit, it started off at, there's a $10,000, $10,100 credit limit. Now the high credit is $18,200, and they got a balance of $5,350. They've been managing that credit, that revolving debt, very good, because they have 71% of the credit available. So that's pretty much how you want to manage your credit. That's like, that looks good. So it's important to understand how to read that information. It's important to understand how to read public information, public records. You have the docket information. You have the total amount of liability. You have the attorney. All that information you would put into the letter. So whatever you see here, you bring it all into your letters, and you dispute that information that's not yours or that cannot be properly verified, as we talk about in the book. So I want to thank you for tuning in. And again, trade lines, that's every item on your credit report that's open and active and reporting on your credit report. Those are trade lines. And then you have your inquiries on your credit report. You have soft inquiries and you have hard inquiries. Hard inquiries, if you're applying for credit, applying for different loans, those are hard inquiries. Job information, they could be hard inquiries, but a lot of times they're soft inquiries just to verify that you are who you are, to make sure you don't have any tax liens or whatnot. But hey, who's to say you should be turned down because you have a tax lien? Does that really impact your character, or did you just have a hard time in your life? Why should you be penalized and can't get a federal job because you have an open tax lien? That's a bunch of crap. So Credit Bureau Secrets Exposed exposes the truth. So what I want you to do is thank me by liking this video and showing you how to read a credit report, and hopefully that this will help you out in the future. And if you want to see some proof of how Credit Bureau Secrets Exposed has helped other people to break the shackles of debt, click the link below and take a look at the videos, or like us on Facebook. Thanks a lot. We have all the links at the bottom of the description. And I actually want to thank you so much. And, you guys have a wonderful day. We're going to minimize this. And we're going to let you guys get on with your life. Have a wonderful one. Bye now.